Dan Edwards, Northstone Real Estate, your Northwest home resource, and thank you for watching. Recently, we just participated in a title class where we discussed some of the pitfalls of purchasing a bank-owned home. Now, when it comes to bank-owned homes, there's some limitations that the banks put on the transaction that can adversely affect a buyer. So I'm going to kind of go over how some of the contracts can be written to ensure that a buyer is protected on title issues when it comes to purchasing a bank-owned home. First and foremost, if you'll take a look at our purchase and sale, now these are purchase and sales that are published by the Northwest Multiple. Of course, there's all kinds of stuff here, but specifically I want to show you on page 2, paragraph E, which discusses title insurance. And here in this section here, it notes that the title insurance shall be the homeowner's policy. Now, there are several different policy types when you purchase a home. One is the standard, then the other is the homeowner's policy, and then there's the extended policy. Now, all three of these policies cover certain things, but a bank on a bank-owned property is only going to offer a standard policy, and that standard policy doesn't cover all the bundle of rights that come with a homeownership. Basically, what it means too is they're offering what's called a bargain and sale deed, and that bargain and sale deed is a deed for the time that the bank owned the property. So it doesn't cover any types of liens or clouds that actually occurred before the bank took over. So if the home wasn't properly foreclosed on, if the deed in lieu wasn't properly recorded, or if there is a security interest or even a construction lien put on the property, some of these things may not come out. So when I write my contracts for purchase for my clients, I use a homeowner's policy, a standard policy. But what happens is the bank shoots back their addendum that says we're only using a standard, and it negates this part of the contract. Now, you'll notice also in another form that is usually with all of my transactions, there's the optional clauses. It's a Form 22D, and it basically allows us to add some additional clauses to the transaction. But specifically, I want to focus on paragraph 2, which talks about the title insurance here. Now, this also points out a standard and extended policy. Now, other agents may say, well, we're going to go with the standard policy because that's what the bank asked, and that would be a mistake. That doesn't protect your buyer. It doesn't protect a buyer from some of those title issues I discussed earlier. Well, finally, what I recommend and what has been recommended is just adding an addendum to the purchase and sale that just states that the title policy shall be the homeowner's policy, and the buyer shall pay any additional fees related to the upgrade of the title policy. This will ensure that there are no clouds. This will allow a full homeowner's policy to be a part of this transaction. And yeah, it will cost the buyer, and I believe it's about 10% more, which in most cases around $80. Well worth it, and I highly recommend it. So I'm Dan Edwards with Northstone Real Estate, your Northwest home resource, where our focus is on your home. Thanks for watching.